Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. Today with me, I have Forbes.com writer Ben Jessel. Hello, Ben.
Hey, Aviva, how you doing?
Hey, really great. And we're going to be talking about ETFs. And ETFs are exchange-traded funds. And we have done a podcast before about ETFs when they were first really raising their head above the parapet, and the SEC was considering crypto ETFs. Now, when we talk about crypto and blockchain, we, of course, and then we talk about ETFs, so crypto and blockchain and ETFs together. There are two things we're going to be discussing during this podcast. One of them are ETFs, which involve the use of cryptocurrencies, and the other topic is going to be ETFs, which are using blockchain. How does that feel, Ben?
That's great. I think it's a great way to divide the world.
Excellent, because everything else has been divided. Why not ETFs? Okay, so why don't we first start with a definition? So, Ben, what exactly is an ETF?
So let's go start even prior to ETFs.
Oh, goody, a story.
Yeah.
I love it.
Go right back to the beginning, not quite to people trading rocks or something like that, but we had these kind of ideas of notions of mutual funds back in the day. And the idea of that was to provide exposures to investors across a range of different stocks or shares or bonds. So to give you an example, if you wanted to get exposure to NASDAQ 100, for example, before mutual funds, you'd have to go and buy 100 different stocks yourself and then manage the weighting that you had on those stocks by buying and selling them, which is obviously very difficult to do. So mutual funds came along and said, look, we're going to actually have a manager that is going to pool everyone's money and then give you a fraction of that. So you don't have to invest in all of the stocks yourself. You just have to have an exposure to them, a synthetic exposure. Now, that was very successful, but the challenge you have with something like a mutual fund is it's quite expensive because you have a manager that is managing this exposure for you. And then also there were some challenges around getting out of the position of a mutual fund as well. And then sometimes fees are front loaded, which means you have to pay a lot of fees up front before you actually start getting to the good stuff. Now, what started to appear really in 1993 was the first one that emerged, was this notion that they could wrap these mutual funds in a vehicle which made them a lot more easy to trade into, trade out of, and had lower fees. So the idea of an exchange-traded fund is that it actually does trade on a stock exchange. And the value of it, rather than being kind of calculated at the end of the day, could actually change intraday because you've got people trading in and out of all the time. So more liquidity means that the price is going to be more realistic at any point during the day. Now, the other thing that started to emerge around this time was the demise of what's called active investing. So the idea is that previously you had some mutual funds where you had a very well-paid investment manager who was stock picking effectively. And this is a type of mutual fund. Now, as it transpired, even despite these very well-paid investment managers, using their smarts to find the best stock, they actually underperform the stock market, and they've done for a while. So you're better off actually in a fund that just tracks the way that the stock market goes up, a little bit like a rising tide floats all boats, rather than having a fund where there's a lot of administration fees where you've actually got the stock picker. There's a bit of a generalization, but that's kind of really the trend we've seen. And that's kind of where exchange-traded funds really started to come into their own. Many of them just track the S&P 500 or the Russell 2000. And then from that, we've just seen an explosion of investment, up from about $417 billion in 2015 to $4.6 trillion globally by last year. So that's nearly a tenfold increase over kind of 15 years. Whereas, mutual funds have gone up in terms of adoption, but nothing like that.
Within each one of these, are they all made of securities, registered, approved securities?
That's right, they are. And they can
Okay.
have different types of securities. Some may be kind of the mainstream kind of blue chip kind of public securities. Certainly for exchange traded funds, the constituents are securities, and they are operating under the 1933 Securities Act and also the Investment Company Act of 1940. So they are indeed registered and regulated.
What I really want to do is I first want to talk about ETFs that include cryptocurrencies within their portfolios.
Yes, let's do that. So when we're talking about ETFs which have a cryptocurrency constituent, you can see kind of what we're trying to do here. From an institutional perspective, it's a lot easier for large institutions like pension funds and corporate organizations to invest in financial instruments that allow them to invest in a way which is very much in a wholesale way. And that means making large investments rather than kind of individual investments in the underlying securities. So futures, ETFs, and those types of products allow them to make these large investments. So with ETFs, you start to see institutional money flowing into the arena. So that's kind of one of the reasons that ETFs that wrap cryptos are important in the industry, because it really signals the mainstream adoption by institutions rather than just kind of individuals or sort of fringe kind of VCs on the periphery. It also means that you can have a range of investments within that ETF that really kind of allows you to broaden your investment. So for example, there are ETFs that not just purely have one single product in them, but provides you with a range of investments that has exposure to crypto. So you could have an ETF that covers 30 different altcoins, for example. If one of those altcoins is unsuccessful, it's going to impact your portfolio, but it's not going to be the sole aspect that's going to affect your portfolio. It's going to be hedged in some kind of way. And that hedging part is actually very important as well, because it means that those that are in institutional finance can start hedging their risk by using these products as well. So it's quite important for crypto and also for the institutional users of crypto that these products do start to get invented and adopted.
But crypto is so volatile, right? So if you were going to have a crypto ETF or even one that had partial crypto in it. So for instance, there's this reality shares ETF trust, which is a branch of Blockforce Capital. They pulled their filing of a proposed ETF, exchange traded fund, of that fund, 15% was Bitcoin and 85% were global currencies. Now, like I said, they pulled their filing from the SEC, and we'll get into that in a moment. But crypto is volatile. So why would somebody, if they had a choice between a regular ETF, which did not include any crypto products, versus a crypto ETF. And I do understand that anything that has to do with stocks, bonds, anything that's securities, or even unregistered securities, it's all a big gamble. I get that. But what would make somebody choose a crypto ETF over a non-crypto ETF?
So I think what's interesting about crypto is that people are beginning to equate crypto with things like gold. You should have some element of gold in your portfolio. People are looking at crypto as the same kind of thing.
You think? You really think that? Is that an age thing? Do you think that even I don't want to say the elderly, that sounds really mean. I don't know, people over a certain age think that, or is that a younger mindset? Who's equating gold and other commodities to crypto?
So, for example, if you look at Grayscale Capital, that's an organization that allows you to embed Bitcoin in your pension fund. So, if you're going to look at the investment profile of a millennial versus someone who's about to retire, you see kind of earlier on, in your life, which I'm certainly not anymore, you see the risk that people have in terms of their risk appetite tends to be far higher earlier in their life than later in their life when they kind of need a little bit more liquidity in their portfolio. So you're seeing kind of people saying, well, Bitcoin is indeed volatile. It has been on an upward trajectory if you look year on year. Therefore, from a long-term perspective, if I was to invest in this, when I'm younger in my life, then potentially if you follow that trajectory, it could be worth something. So while there's volatility in the short term, longer term, potentially there could be this upward trajectory. Now, if you have 3% in your portfolio, the rest of your portfolio is maybe a little bit more conservative with bonds or blue chip companies, then potentially, that may kind of give you an exposure. So I think there's an argument to suggest that that is a kind of worthwhile kind of investment strategy. Not that I am qualified to give investment advice at all, but it's something that's been considered. Now, I think this kind of equation to gold is a difficult one because gold certainly doesn't have the kind of volatility characteristics. One thing that has been said that I think is very interesting is that Bitcoin and certainly these coins are non-correlated assets. And what that means is that in theory, they're detached from how the rest of stocks, shares, and bonds behave. So in theory, if interest rates go up, Bitcoin may not also either go up or down, in a correlated way. Now, I think what's very interesting is that you're actually seeing that behavior change. So, for example, when the Iranian missile strikes happened on US bases, you saw a spike in Bitcoin as people were starting to flee to it as a safe haven. A similar thing happens to gold. So you could make an argument that Bitcoin is being seen, and when I say Bitcoin, I'm also saying altcoins as well, as a safe haven in times which are turbulent when other asset classes such as equities are getting hit because people are concerned about the economic context because of certain things that are happening, such as the threat of war.
So really, it's more something that people are maybe looking at as a dire need than a choice of investment?
There's a couple of different types of investors. Certainly, I didn't wake up when I saw the news and say, oh my goodness, I need to protect my investments by moving into Bitcoin. Probably I should. Maybe I'm not a sophisticated investor. But I think there are fund managers, private equity managers, venture capitalists, and some hedge funds who are making that determination. And, if you think about what financial services is, it's really all about data. And you're arbitraging, which is you're exploiting the difference in data. So a lot of these hedge funds are sitting down with very complex mathematical models and even algorithms now, which computers are running, that are actually kind of projecting how certain assets are going to perform based on current events. In fact, there's one very powerful program that I've seen where you can actually literally type in word form and you say, what's the impact going to be of a war to these asset classes? And it'll tell you a 7-day, a 1 month, 3 month, 3-year projection. A lot of these very sophisticated hedge funds have that. But right at the other end of the scale, I think kind of the unbanked aspect, a lot of people are unable to get to bank accounts, either because they don't have identity, maybe if they're refugees or within a country when they don't necessarily have paperwork, or if they are just in rural places such as favelas in Brazil that may not have banking infrastructure. And the ability to use Bitcoin as an alternative financial ecosystem is very appealing kind of to those people. Particularly if you look at things like gift cards, which provide an on-ramp into kind of Bitcoin, where you don't need to do KYC if it's under a certain threshold. So I think kind of for those people, again, I don't think they're saying, oh my goodness, there's a war in the Middle East potentially happening, I'm going to make that investment. But certainly if you're directly affected, you may be putting your money into something where you can recover it with a 64-bit series of numbers, rather than stuffing your dollars in an envelope or your mattress.
Well, that these crypto ETFs are something which keep being thrown at the SEC. And according to this news article about Reality Shares ETF Trust, the one that I was just talking about, where 15% of it is Bitcoin and 85% is global currencies, they were actually told by the SEC to pull it back out. And apparently, whether it's true or not, in the articles I've been reading, what the SEC apparently said that they liked the idea, but they did not want to see it get approved just yet. But going in the vein of crypto ETFs, and I like my predictions, and we're in January of 2020, not only a new year, but the start of a new decade. Do you see this as the year where a pure crypto ETF will be passed?
I think it is increasingly likely. And the reason I say that is you're beginning to see a little bit of a split or a bit of a rift between the two organizations that have some form of determination around that. So the CFTC, that regulates derivatives, and the Securities and Exchange Commission that regulates securities. The CTFC also has the remit of regulating commodities, which Bitcoin has been defined as. So I think what's interesting is the Securities and Exchange Commission has fairly consistently said, look, we don't want to approve a Bitcoin ETF because we think that Bitcoin can be manipulated. And there's a lot of news flow that suggests that in many of these exchanges, 90% of all the volume is faked. So it stands to reason that you can't have an exchange-traded product or fund that is based on a manipulated market, because that certainly is going to have some major implications for global finance. Now, the CTFC, on the other hand, has said, well, wait a minute, there are ways around this, right? There are many exchanges that exist now that are trading Bitcoin, not just in the US, but globally. There are ways that you can use algorithms to really identify what an underlying real price is by pooling a lot of this information together. I think one of the challenges you have with Bitcoin, which is fairly unique when you look at other securities, is there are so many venues around the world that Bitcoin is being traded today. And there still is a healthy arbitrage that you can gain today. And what I mean by arbitrage is that you can sit there with your laptop open with many different exchange venues. You can look at the difference of where they're being traded in terms of the price, and you can buy in one and sell in the other and make a profit. Now, that is something that used to exist in bonds and stocks today, but was what we call arbitraged out. So in other words, those that were making money out of it stopped making money because computers stepped in and said, look, we can do this far more effectively than human beings. And then that arbitrage disappeared. So I think what you're going to begin to see is that as you see the maturation in this sector, you're going to see arbitrage starting to take the difference out of these prices in these different exchanges. It's going to be harder to have fake volumes because the arbitrage won't exist anymore. And at that point, it's a lot easier for these ETF providers to point to the fact that prices are becoming uniform across these different exchanges and say, hey, they may be being manipulated, but people are pouncing on the difference in prices because there's a lot more liquidity, so that's less of an issue. And anyway, with all this algorithmic trading going on, you're beginning to see that being removed from the system. And that will happen fairly quickly. And it's always what you call liquidity which drives that. Liquidity is really shorthand for money, and money speaks. Money rolls down the hill just like water does. And that's, I think, how we're going to get to that point where it's going to start to get mainstream adoption. And eventually someone's going to say yes. And if you look at the SEC, they want to say yes to something because they don't want to be the bad guys forever, right? And you're beginning to see the change in the tone from the SEC. For example, Crypto Mum is the very famous individual within the SEC who's almost a lone voice at the moment, who is trying to sound a more conciliatory tone for the SEC around crypto. I think you're going to see more voices like Crypto Mum coming to the fore.
Right. And in case anyone doesn't know, Crypto Mum or Crypto Mom, if you're in America, Crypto Mum or Crypto Mom is Hester Pierce. And people are saying that she will become the new head of the SEC when Jay Clayton steps down. And I just want to clear one other thing up that Ben was just talking about. And he was just talking about the CFTC, and that stands for the Commodity Futures Trading Commission. So now that we've kind of closed the door on crypto ETFs, I'd like to start off talking about blockchain-centered ETFs by talking about WisdomTree, who is the lead investor in a $17.65 million Series A funding round, which was just announced. So talk to me about why this is any kind of a big deal.
Absolutely. So if you think about what exchange-traded funds really are allowing people to do, there's more institutions to do, more specifically. A lot of your pension funds today are exchange traded funds that are following an index, over 40, 60 years, so that when you come to retire, you have a nice little nest egg. And if you think about just the amount of money that is sloshing around in pension funds, it's trillions upon trillions of dollars. So there's a big amount of money in what we call the buy side. And the buy side are the folks with the money making investments who are calling the shots. And they are in charge of just a very large amounts of money. So really kind of getting these guys on board around blockchain is going to be a real paradigm shift for the industry because they just have so much money. And if you think about the costs involved in investing that money, if you're just shaving off a tiny amount, a basis point, for example, you are unlocking a very large amount of money. So WisdomTree is one of those providers. Funnily enough, they actually started off as a research company, an authoring company, similar to Forbes.com and also some of the McGraw-Hill companies. And they started to get into ETFs in about 2006. And really, they kind of rode the wave of that explosion of ETFs to what it is now, which I said before is about $4.6 trillion of investment. So if you're going to think about the evolution of the industry, we saw mutual funds emerge. Then we saw ETFs beginning to eclipse and replace mutual funds. We saw the rise from what was called active investing, when we saw investors trying to pick stocks, to passive investing, when people just rode the wave. So a lot of these ETF providers are saying, this is great, but what's the next iteration and innovation of this product? And everyone's looking for the next thing because it's a very, very competitive area where margins are razor thin today. And that's because it's become very competitive. So people are looking at many different things. For example, they're looking at non-transparent ETFs as kind of one approach. The other approach is blockchain. So blockchain seems to be the technology and the vehicle that people are beginning to focus on. And it's not just WisdomTree. You're seeing, for example, Franklin Templeton Investments, which again is a very large ETF who have $717 billion under management. They're getting into the act. You're seeing USCF Investments LLC, who are a $3 billion AUM fund manager provider, who have also signaled their intention to get into the market. So this appears to be a trend, but I think what's unique about WisdomTree is rather than saying, look, we're looking at this area, we're potentially kind of launching products that use the blockchain, they're putting their money where their mouth is, and they've actually made an investment and led an investment in a startup in this space. Now, I think what's interesting also to see is that each of these companies are taking a slightly different approach to the market. If you look at what Franklin Templeton are doing, they're really effectively saying, we're going to provide a mechanism where you can directly buy ETFs through a wallet which is kind of resident on your phone. So they're kind of saying, we believe the future is really about a direct consumer model around ETF provision. And they're also kind of using blockchain to track some of their ETFs by kind of saying, look, we're going to record the ownership of these ETFs kind of on a blockchain. That's kind of one technique. That's what we call a direct consumer primary market technique. But what WisdomTree have done is they're taking a very different approach. They're saying it's all about compliance. So we're going to try and make compliance interesting and sexy now, which is not an easy thing to do. But if you look at what they're trying to do, they're saying, we think that WisdomTree is going to be important around compliance, which is ensuring that people are buying and selling these assets in a way that meets regulation. So why are they doing that? Because after all, blockchain is all about moving money across borders without, the governments necessarily kind of having a purview as to what's being done. I think they're taking a very interesting approach. They're saying, look, if you are, for example, a Midwestern broker-dealer and you have helped a company raise a bit of money, in private equity, some mom-and-pop shop, today, how are you going to reach a Japanese investor? You don't understand what the category of investment is for a Japanese investor. You don't know how to reach, those people because you're just not involved in the Japanese ecosystem. You don't understand what the regulation is going to be. Well, the currency, what they're trying to do is they're saying, look, we have the rules across the entire world to understand the type of things that can be invested in and the type of regulations that determine what investors have. So what they're saying is we can pair up with other broker dealers in Japan or other places in the world, and we can say, look, we don't need to know the name of this Japanese investor, or we don't need to have the private information about this investor, but we can say to a Japanese broker-dealer, we've got an investment that we believe that your client can invest in because our friends at Securrency have the rules around how that can be invested in. And why that's interesting is that suddenly you're no longer talking about ETFs. You're talking about an organization with a lot of investors and a lot of money saying, we want to have investment products that are globally reachable and investable in, that transcend this idea of just ETFs. And then you start kind of getting into this world just about investing in things that are now digitized. I think that's what's super exciting about what these guys are doing. They're thinking globally, they're thinking cross-asset, they're thinking outside the box, and they've actually got a product that, if you look at it, was effectively funded by people in the US Navy and people who are kind of very much in that kind of federal, world, who are trying to police cross-border transactions, and they get it, and they're legitimized with, the government themselves.
I think I'd better also mention that the actual name of this, you already alluded to it, company who's doing this Series A funding round is actually called Securrency. WisdomTree put $8 million into this Series A funding round for Securrency. But what also is important to mention is that WisdomTree also launched their own Bitcoin ETP on one of the Swiss exchanges. So they have their own Bitcoin ETP. Now, an ETP is an exchange-traded product. And this is a regularly priced security which trades during the day on the National Stock Exchange. And from what I understand, ETPs they trade ETFs. Is that the case?
That's right. It's effectively another word for an ETF, but specifically it targets commodities, which certainly in the US is how Bitcoin has been defined. It's been defined as a commodity.
Well, so let me just ask you this. The fact that they're talking about, we're talking about a blockchain-led platform when it comes to Securrency's project and what WisdomTree and all these other people invested in. But it's obviously going to be more than just a project that has the blockchain word on the wrapper. It's going to probably do more with cryptocurrencies in the future. Wouldn't you say that? Because why would you have something that says blockchain on the wrapper and then not use crypto as one of the main proponents of the ETFs that it should embody?
I can imagine that they'd be going across assets, of which crypto would certainly be one. I think when we start seeing the volumes being large enough to actually adopt, I think what's interesting to kind of see is that there's now a gold rush for this space. The space being the ability to take all kinds of assets and trade them in a way that's frictionless. So, for example, if you look at WisdomTree and the fact that they are working in Switzerland, they're working with the Swiss Stock Exchange, which is this giant in Switzerland that is where you trade traditional securities, but they've actually created a mechanism to trade digital assets. And they've started to pair up with other organizations. One, for example, that was spun out of Swisscom, a large phone operator called Daura. And that is effectively a digital printing press for small to medium-sized organizations who want to issue equity. So it's very difficult today, if you're a small company and you want to go and get investments and you want to start issuing equity. It's very paper-based, Excel spreadsheets, it's phoning around investors. Swiss Stock Exchange is now saying, we're going to help provide a mechanism for all these assets to become digitized and to flow through all of the kind of the natural pipes that exist in capital markets, all the way from issuance to finding investors to them being traded on the secondary market. So with SIX doing that with Daura, you're also seeing WisdomTree now doing this with Securrency, and then tying up in Switzerland, but then eventually we'll start to see that in the United States. So I think that's the interesting kind of trend that we're beginning to see, is that all assets are becoming digitized and traded anywhere using any exchanges in the way that public IPOs are doing today. So that's the exciting area that I think we're going to start seeing a lot of movement. Switzerland will undoubtedly be first, and then we'll start seeing it this side of the Atlantic.
Well, if considering that Wisdom Tree is a NASDAQ-listed firm with $64 billion US dollars in assets under their management, it will definitely help spread blockchain technology to many users. And I have a feeling that it's going to light that fuse, I think, in order for this to really take over for many other ETFs in terms of blockchain being the underlying technology. Well, I think that we've pretty much wrapped up everything about ETFs and WTF ETF. So thank you very much, Ben, for joining us for this week's Crypto and Blockchain Talk.
Been a pleasure as always, Aviva.
Yeah, I can't wait for our next podcast. Thank you, everyone, for listening to this week's edition of Crypto and Blockchain Talk. Please remember to tell your friends and family to download us on iTunes, Stitcher, Podbeam, Spotify, SoundCloud, and about another 20 other platforms which we're available on. Also remember to like us on Twitter and leave comments on Facebook, and email us at education@savvydigital.com. That's education@savvydigital.com if there are any topics that you would like us to dive deep and delve into. Again, thank you for listening to this week's Crypto and Blockchain Talk. Take care and goodbye.